All right, we are almost to the end. We are doing chapter 2 homework for Saley Software Solutions, step 14, which is our final step. It's a bit of a long one, but after that we'll be done. So I think we can stick it out. We're tough. We're accountants. All right, so now we're going to enter the remaining balances. So we need to bring the permanent account balances as of December 31st, and we're going to create a journal entry. So we're going to go to new. So before now, I've always said, don't do the new on the left, do the new on the right. But now we're doing the new on the left. Black new. And we want a new under other journal entry. Here we go. Our journal entry form. Okay. Change the page. All right, before we start entering some accounts, let's change our journal date to 12/31/2023. And our journal number, instead of being journal number 1, we are going to type in opening entry. The book puts it all in caps. I like all caps. That's going to catch my eye better. But if you do it all lowercase or a mix, it's not going to matter. Okay, so we've done that. Now we have to enter the journal entry exactly how it appears in figure 2.82. All right. So the first account is 100 checking. So I'm just going to type in 100. There it is. And we want to debit for 10,500. 10,500. Tab will get me out of there. The description is going to be opening entry. So I'm just going to copy it from the journal number and paste it right in there. Sweet. Okay. 180 computer and office equipment. So 180 computer equipment. Ooh, the name's a little different. That's okay. It's going to get us to the same place, but I don't love that. Okay, but that's okay. We're going to roll with it. 5134. Okay, and opening entry got copied down already. So look at you. Sweet. Okay. Next is going to be 182, and furniture and office equipment, and that's going to be $1,400 even. 1,400. I don't know what kind of furniture we have for $1,400. Maybe it's a really nice chair. Maybe we have nothing but just one really nice chair. That'd be awesome. Never had a $1,400 chair, but I bet it's comfy. All right, let's keep rolling. So now accumulated depreciation 189. Accumulated depreciation. All right. This, we know accumulated depreciation has a natural credit balance, so we are going to credit 1361. And our opening entry just tracks all the way down, which is really making me happy. I have to tell you, I love it when there's something I don't have to enter. All right, let's keep going. 195 security deposit. Now you're going to notice QuickBooks, they're not going to let you do an unbalanced entry, so it's going to want to populate all of these things. Just ignore that. It's a little obnoxious, but but I mean, it's trying to be helpful. So I mean, I guess we won't talk bad, but ignore it. Okay, security deposit of 1,000. This is in the assets, which means we've placed a security deposit of $1,000 on our real estate. All right. I'm just used to seeing security deposits in the liability side, which is more like if we're a landlord. But this one's an asset. But that's so we can kind of tell what it is by where it's at. All right, notes payable 280. There we go. Notes payable. This one is going to be a credit of 3,000. Anything with payable in it is going to be a credit. I won't say everything. I hate superlatives because I always trip myself up with them, but most likely. All right, now we got common stock. That's an equity account. That has a natural credit balance. So we are going to enter a credit of 2,000. Then we are going to go down, and retained earnings is 350. There we go. It's going to have a credit balance as well. Now this one could have a debit balance, 16,158, and that would just mean that over the course of the company, we have not made a profit. We've actually lost money. So it'd be a bummer, but we've got a credit balance, which means we are making money, which is awesome. All right, now this one is not going to have a number. It's called opening balance equity. So that's not actually an account. It's all going to go into stock or retained earnings or something, but somehow we have that. That must have been when we imported all the other stuff. The offset went to opening balance equity. So we need to clear that out because that's not a proper account. We want to get that off our books. And opening balance equity is going to be a debit of 4,000. Okay. And if you want to talk more about that, feel free to pop into office hours and I can talk more about it, but I'm not going to take up a bunch of time here. 400 software selection. Hey, we created that account. I remember that. So there's software selection and installation, and that we're going to debit that for 1,200. Clear that. Okay. Now you're probably thinking, why are we debiting revenue? My guess is that it already got entered somewhere and we're trying to clear it out. Would be my guess. It's maybe prior period revenue. So it got entered probably when we imported some invoices. And so now we have to just get it out of there because it's already been reported in a prior period. I'd have to look at it more to see if that's what it was, but that's my guess. So, if any of you are like, why are we debiting a revenue account? That would be why. All right. So then we have 410 troubleshooting, which I'm guessing is going to be the exact same situation where we're debiting it for $180. God, it's costing me $180 just to enter all this stuff into QuickBooks. Okay. And then interest expense, 700. I almost read that as internet expense. It'd be super expensive for internet. Although maybe not if we have a bunch of cables and stuff. $895. It already automatically credited $895 since this is the last line. We're just going to let that sit, which is awesome. All right, so that is our journal entry. Let's go down. Just make sure we're in balance. 23,414, 23,414. That matches what's in the book. So I'm feeling pretty good. If I wasn't sure though, I could always just double check these numbers before I hit enter. All right, and then we're going to hit down here in the right hand side, either save and new or save. The book says save and close. Just do save because we don't have a save and close. Because save and new would bring up a sheet to do a new journal entry, and we're not doing another journal entry. Then we can just hit the X in the upper right hand corner, close. All right, awesome. So now let's see what our balance sheet looks like.